The world's most important money is starting to look a lot less untouchable. America's debt is exploding. The cost of holding the whole system together is rising, and hiding inside that crack is one metal most people still ignore. If you want to see the deeper shift before the headlines catch up, why not subscribe and stand with the people who look past the noise? For years, the dollar looked unbeatable. It was the strong tower, the safe door, the last thing people questioned when markets shook. But strong systems do not break all at once. They weaken in layers. First, the numbers get bigger. Then the excuses get louder. Then the trust starts to slip. That is where this story gets dangerous. Because the dollar problem is no longer just about inflation. It is no longer just about interest rates. And it is no longer just about politics in Washington. Now it is about something deeper. It is about how long the world can keep believing that more debt solves a debt problem. It is about how long a country can borrow more, pay more interest, print more support, and still be treated like nothing is wrong. And when that belief starts to crack, money looks for an exit. That is where silver enters the story. Not as a shiny side note, not as a poor man's gold joke, but as one of the few assets that sits right at the center of fear and need. Because silver is not just money metal, it is also an industrial metal. That means people buy it for protection when trust falls, and they buy it for real-world use when technology grows. It can be pulled by two powerful forces at the same time, and that matters now more than ever, because the dollar is being squeezed from both sides too. On one side, America keeps stacking debt higher. On the other side, the world is slowly trying to depend on the dollar less. This is not a movie scene where the dollar disappears overnight. That is not how real systems change. Real shifts happen like rust on steel. Slow at first, then suddenly obvious. America owes an enormous amount of money, so much that the number itself barely feels real anymore. The government keeps borrowing to fund old promises, new spending, military power, rescue plans, and rising interest costs. It is like using one credit card to pay another, while the interest rate keeps climbing. And here is the part many people miss. Debt is not only a problem because it is big, it becomes a bigger problem when the cost of carrying it rises. If rates stay higher, paying interest eats more of the budget. If rates fall too fast, the dollar can weaken and inflation can come back harder. That is the trap. Raise rates and debt pressure grows, cut rates and confidence can wobble. Print support and the value of money gets questioned. Do nothing and the stress keeps building anyway. So the real issue is not just, is the dollar dead? That is the wrong question. The better question is this. Can the dollar stay as strong as people assume while the system holding it up gets more fragile every year? If this already feels bigger than a normal market story, are you subscribed yet? Or are you still waiting for the crowd to notice? Now let's strip this down in very simple terms. Why does the dollar matter so much? Because the dollar is not just America's money. It is still the world's main tool for trade, savings, debt, and reserves. A reserve currency is just the money countries trust most to hold in size, like the biggest emergency water tank in a neighborhood. Even if everyone has their own bottles at home, they still trust that giant tank when real stress hits. For decades, the dollar was that tank. Oil was priced in dollars. Global debt was built around dollars. Countries stored dollars for safety. Investors ran into dollar assets when fear rose. That gave America a huge advantage. It meant the United States could borrow more easily than most countries. It meant demand for dollars stayed strong even when America made mistakes. It meant the system had more room to bend without snapping. That kind of power is rare, but power can create bad habits. When people know the world still needs their currency, discipline gets weaker, borrowing becomes easier, short-term fixes become normal, pain gets delayed instead of solved. That is how big problems grow in modern finance. Not with one disaster, with years of comfort, with the belief that the next buyer will always show up, with the assumption that trust is endless. Now think about what the world is seeing. America has giant deficits. Political fights keep getting worse. Debt keeps climbing. Interest payments are getting heavier. At the same time, rival powers are trying to build more trade outside the dollar, not because they can replace it tomorrow. They cannot. But because they do not want to depend on one system forever, especially one tied to sanctions, politics, and US policy choices. That is why this is not a clean collapse story. It is a confidence erosion story. And confidence is strange. It can stay strong for years, then weaken in pieces that most people ignore until the whole picture changes. Maybe one country buys a little less treasury debt. Maybe another settles more trade in local currency. Maybe central banks keep adding gold instead of more dollars. Each move looks small on its own. Together they send a message. The message is simple. The world still uses the dollar, but the world also wants backup plans. And when the biggest system on earth starts making others want backup plans, that is not strength, that is an early warning sign. This is where many people jump straight to gold. And yes, gold matters. Gold is the classic trust break asset. When paper systems feel shaky, gold wakes up fast. But silver is different. Silver often sleeps longer, it can look forgotten, it can lag, and then when the pressure builds enough, it can move with shocking speed. Why? Because silver is a much smaller market than gold. That means it takes less money to move it hard. Think of a large ship and a small boat in rising waves. The small boat gets tossed much more violently. That is good and bad. Silver is more volatile. It can drop hard. It can scare people out. But when a real move begins, that same wild nature can turn into explosive upside. If you care more about signal than comfort, shouldn't you already be following before this becomes the obvious trade everyone pretends they saw coming? Now let's talk about the second force pushing silver. Not fear, need. Silver is deeply useful in the real world. It is used in electronics, solar panels, electrical systems, medical tools, and other technologies that need strong conductivity. In simple words, silver helps energy and information move well. That matters because the modern world wants more electricity, more chips, more data centers, more clean energy, more smart devices, and more connected machines. Even when economies slow, the long-term direction is still toward more electrification and more high-tech infrastructure, and silver sits inside that story. So while gold is mostly driven by money fear, silver has two engines. One engine is monetary stress, the other is industrial demand. When both start pushing in the same direction, the metal can stop acting sleepy very fast. And there is another piece that makes this even more interesting. Silver supply is not easy to ramp up overnight. You cannot just snap your fingers and flood the market with new silver tomorrow. Mining takes time, money, permits, labor, energy, and stable politics. A lot of silver also comes as a byproduct of mining other metals. That means silver production does not always rise just because silver prices rise. If lead, zinc, or copper projects slow, silver supply can stay tight too. That creates a strange pressure point. Now add this together. You have a world with rising debt stress, a dollar facing more long-term questions, central banks and investors looking for protection, and a metal with real industrial demand and limited easy supply growth. That does not guarantee one straight line up. Nothing in markets works like that. But it does create the kind of setup that can surprise people who were only looking at yesterday's price chart instead of tomorrow's pressure. And that is the trap most people fall into. They wait for proof that everyone else already sees it, but by the time silver feels safe, it may no longer feel cheap. By the time the headlines get dramatic, the easy move may already be gone. Here is where the story gets even more powerful. Silver does not need the dollar to die to win. That is a huge point. Silver can rise simply because trust gets weaker at the edges, while industrial use stays strong. In other words, silver does not need a total fire. It only needs more smoke, more debt, more money printing fear, more reserve uncertainty, more pressure on supply. That is a much more realistic story than full collapse fantasy. And realistic stories are usually the most dangerous because people underestimate them. They prepare for the impossible headline and ignore the slow shift already happening under their feet. Think about how people react to money trouble. First, they deny it, then they explain it away. Then they get interested after the move starts. Then they panic when the price is already far above where they could have bought calmly. How many times have people looked back at a major shift and said, "The signs were there, I just did not take them seriously"? There is also a deeper psychological reason silver gets ignored. It is not simple enough for the gold crowd, and it is not exciting enough for the tech crowd. It lives in the middle, which is often where the biggest opportunities hide. Gold gets the respect. Bitcoin gets the headlines. Stocks get the daily obsession. Silver gets eye rolls until it starts moving. Then suddenly everyone remembers it exists. That delayed attention matters. Because markets often reward what is ignored before they reward what is loved. The crowd usually chases what already feels important. The smarter move is often to watch what becomes important when pressure changes. And pressure is changing now. The dollar problem is getting bigger, not smaller. Even if the currency stays dominant, the cost of keeping it dominant is rising. That cost shows up in debt, in interest, in policy mistakes, in political strain, and in global trust. Some people hear this and think, fine, then just own dollars and earn interest. That works until it doesn't. Because yield feels safe right up until inflation, currency weakness, or policy reversal starts eating the real value underneath it. A high number on paper does not always mean preserved purchasing power. That is the key phrase here. Purchasing power. Not just price, not just returns. What your money can still do for your life later. If the dollars in your account buy less, then the system has already taxed you in silence. No vote, no warning siren, just slow loss. That is why people run to hard assets when trust weakens. Silver is one of those hard assets. You cannot print it, you cannot type it into existence. You have to dig it out of the ground, refine it, move it, and hold it. That physical reality matters in an age of digital promises. If you want more stories that connect money, power, and the real world before most people feel the consequences, why not subscribe now? Now let's be honest about the other side. Silver is not easy. It is not calm. It does not reward weak hands. It can move sideways for long periods, then punish people with sharp drops right before big breakouts. That is why silver plays such a strange role in the market. It tests conviction. It shakes out tourists. It makes people feel stupid right before making patient people look early instead of wrong. That emotional pressure is part of the asset, and maybe that is exactly why it fits this moment, because this is not a comfortable time. This is a time of mixed signals. Stocks can hit highs while debt grows worse. The dollar can bounce while trust weakens underneath. Surface strength and deep weakness can exist at the same time. That is one of the hardest things for people to understand. They think if the system has not broken, then it must be healthy. But a person can look fine for years while stress builds inside the body. The global money system is a lot like that. It still functions. Payments clear, trade moves, markets open. But the underlying strain keeps building. More debt means more future promises. More future promises mean more pressure on future taxpayers, more pressure on future policy, and more pressure on future money creation. At some point, the burden becomes political, then social, then monetary. That is when people stop thinking in theory and start thinking in self-protection. And self-protection changes behavior fast. Big funds start reallocating. Central banks shift reserves. Households look for inflation hedges. Investors who ignored metals for years suddenly want exposure all at once. Again, with silver, that matters more because the market is smaller. A modest wave of new interest can hit a tight market much harder than people expect. What looks like a sleepy asset can become a crowded doorway very quickly. That is how sharp moves happen. There is also the gold to silver relationship. You do not need a complicated formula here. Just remember this. When gold runs and silver stays behind for too long, silver sometimes catches up violently, like a rubber band stretched too far. That catch-up phase can be emotional. People who ignored silver suddenly chase it. People who sold too early feel sick. People who laughed at it start making confident predictions after the move is already underway. That is the usual pattern. And in a world where gold is gaining attention because trust in paper systems is weakening, silver does not need much imagination. It just needs investors to ask one dangerous question. If gold is waking up because confidence is falling, why is silver still being treated like an afterthought? That question can spread fast. And when it does, silver stops being boring. It becomes a story about value, scarcity, industry, fear, and monetary doubt all colliding at once. This is also bigger than trading. It is about understanding the kind of era we are entering. For a long time, many people believed central banks could smooth every problem, print through every crisis, and manage every shock with a new facility, a new promise, or a new rescue package. That belief is weaker now, not gone, but weaker, because each rescue solves one problem by feeding another. Save growth, hurt the currency, defend the currency, hurt the debt load. So what wins in a world where the managers of the system have no painless option? Usually the answer is not found in promises. It is found in assets with limited supply, real utility, and rising strategic value. That is why silver matters here. Have you noticed how the biggest shifts usually look boring right before they become impossible to ignore? Now let's bring this down to real life. What does this mean for the average person? It means the old idea of safety may not be enough anymore. A bank balance can look stable while losing real value. A portfolio can look diversified while still depending on the same fragile system. This is not about panic. Panic makes people sloppy. This is about seeing clearly. It is about understanding that money itself can become part of the risk when debt grows too large and policy choices get boxed in. If the dollar keeps facing more pressure, even slowly, then assets outside the pure paper system become more important. Gold is one answer. Land can be another. Energy exposure can matter too. And silver sits in a very unusual place among them. It is small enough to move hard, useful enough to stay relevant, old enough to carry monetary history, modern enough to fit the next industrial wave. That combination is rare, and remember, the title is not "Silver Will Save the World." The title is much simpler. The dollar problem just got bigger, and in that kind of environment, silver could be one of the clearest winners. Could, not must. That word matters. Because serious thinking leaves room for volatility, delays, and wrong timing. But serious thinking also recognizes when the setup is becoming too strong to ignore. So what should people watch? Watch debt. Watch deficits. Watch interest costs. Watch whether the system needs lower rates even while inflation risks stay alive. Watch what central banks do, not just what they say. Watch gold. Watch industrial demand. Watch whether silver starts attracting attention after years of being treated like background noise. Those clues tell the story before the loudest headlines do. And maybe the biggest clue of all is this. When a system depends more and more on confidence, even small cracks matter. Because confidence is not a warehouse full of steel. It is a story people agree to believe. And stories can change. Once they change, asset prices can change much faster than public opinion. The market starts moving before the dinner table does. That is why being early feels lonely, and why being late feels expensive. Silver lives right in that gap between lonely and expensive. That is why it frustrates people. That is also why it can reward them. If this shift is making more sense now, are you still watching from the sidelines, or are you ready to follow the signals before they turn into headlines? Here is the final truth. The dollar is still powerful, but power under strain behaves differently than power in its prime. It becomes more defensive, more sensitive, more costly to maintain, and the world around it is changing. More debt, more geopolitical tension, more competition, more resource pressure, more demand for real things in an age full of paper claims. That is the perfect backdrop for silver to matter more than most people think, because silver is not just a metal in this story, it is a mirror. It reflects distrust in the system, hunger for hard assets, and the needs of the next industrial age all at once. If the dollar problem keeps growing, silver does not need permission to reprice. It just needs people to realize that what looked stable on the surface was getting weaker underneath. And by the time that realization feels obvious, the window may already be closing. That is how the biggest shifts usually work. Quietly at first. Then all at once in the minds of people who thought they had more time. And when that day comes, silver will not ask anyone if they are ready. Because in the end, the winners in a broken money era are often the assets that were ignored while the warning signs were still whispering. And if you want to keep hearing those whispers before they become panic, why not subscribe now?